Hi, my name is Darren from NHR Tax. We're a firm of accountants, lawyers, and tax advisors who work with entrepreneurs, expats, and investors to help them navigate the somewhat confusing world of international tax. I may be a tax advisor, but I'm not yet your tax advisor. So please bear in mind that this is not meant to be advice. We're having a general conversation, general principles, and I'm hoping that your takeaway from this will be concepts and tools that you can use when you're speaking with your own advisory team to create a solution that's tailor-made to you. So again, NHR Tax, we have over 2,000 articles, over 1,000 videos, all free of charge. I'm recording this in December 2022 from Miami. I landed in Miami from Lisbon, Portugal yesterday because I wanted to, I'm not a fan of cold weather. So even though Portugal is a beautiful Mediterranean climate, sometimes it does get a bit chilly for me. I love my heat, so I love Miami, especially during winter time. Normally it's still warm, and I spend time in Dubai, and most of my business happens in Singapore, which is where we have our actual HQ. So having said that, let's jump in. What is going to happen after 10 years? Because as we know, the non-habitual resident scheme, which is, we discuss that in detail at length all over our website, many videos, it only lasts for 10 years. But what happens after that, right? It's kind of obvious. Well, but to state the obvious, the benefits, the NHR benefits disappear. So that flat tax at 20%, that exclusion on certain categories of foreign income that you've enjoyed, it all goes, poof, it goes away. And you'll be subject to the regular tax regime as everybody else in Portugal, where you're going to be taxing your worldwide income up to 48%. And, that's 48% plus social charges on earned income anyway. We have a video talking about social charges because that's sometimes misunderstood. But you're going to be subject to taxes on your worldwide income just like everybody else. Another question people ask, so that when I tell them, okay, what's going to happen after 10 years? You're going to have to face the heat like everyone else. Then they ask me, well, is there a possibility that you get an extension after 10 years? My response, and again, this is just my opinion, is that probably not. Because, well, even though it's a great incentive, there's pressure at the European level. I think there's a general dislike of these special tax regimes at the EU level. So the EU has made it pretty clear that they don't like investment migration. So they don't like citizenship by investment particularly. They don't like golden visas. And sometimes part and parcel with that would be certain special tax regimes. And we know that to be the case when the EU said it, more or less they've said it. And within the context of Portugal in particular, the reason why I think is around 2020, that before 2020 or so, if it is that you move to Portugal and you receive foreign pensions, you could have received it tax-free under certain circumstances. That could have been received tax-free into Portugal. But they have since implemented a 10% charge on pensions and foreign pensions. Where did it come from? Well, it actually came from the EU. They got basically a mandate came down from Brussels. Hey, that tax-free thing ain't going to work. You need to put in a tax. So that it's evidence of my point, which is they are, just like everybody else, subject to pressure from the higher ups. The Brussels doesn't like it. It's unlikely that you'll get an extension. In fact, I would wager that the future of the NHR probably has a question mark over it. And I'm not picking on the NHR, but I'll throw in some of the non-dom regimes in some of the other European countries, as well as the Beckham law next door in Spain, and so on and so forth. So I think those are all up in the air long term, given the direction that we see Brussels taking. Just giving you guys a heads up as you plan for the long term. And I want to probably just take a little deeper dive into what's been going on and giving you a sense for what those trends would be, right? So obviously we know what happened to Cyprus, and we know that there's legal action against Malta about their citizenship by investment, right? But so I think it's really important to pay attention to these trends and the signals we get from where it comes from the centers of power, so Brussels and Washington on the US side, because to be honest, Washington and Brussels, they kind of move in tandem. They move in sync when it comes to some of these initiatives. And so you can look at one and you understand what the other is just about to do. So it's not rocket science, it's just paying attention to the trends. So we saw a trend, we're seeing a trend, I think, towards citizenship-based taxation. At one point in time, it was just the US. It was like, you have a US passport, you have a green card, tough luck. You'll be subject to taxes on your worldwide income no matter where you go. But we've since seen in the last decade or so, the last couple of decades, that it's not just the US, because the other big English-speaking countries, so Australia, New Zealand, Canada, UK, they also have certain circumstances, and even though you no longer reside in those jurisdictions, there are fallback rules that apply. And you still, if it is your center of life, is still deemed to be there. And sometimes it's very, threadbare definitions of what triggers those fallback rules. But the point is that you're still subject to taxes in those jurisdictions, even though you no longer reside there and you haven't been there for years. If it is that you are a nomad, for example, and you're moving around and you're not able to tell the CRA in Canada where it is you are, same with the revenue authority in Australia, the ATO, then they say, you can't tell me, you can't show me a lease agreement or utility bill from where you claim to be living now. Well, default, you're still going to be taxed in Canada, Australia, as the case may be. So citizenship-based taxation, it's a thing. And other European countries have those fallback rules as well, Germany, Italy. So it's something to pay attention to. As you consider what your strategic plan is beyond 10 years and being based in Europe, it's important to take a look at that bigger picture. Another thing is exit taxes. Again, at first, it was just a US thing. You want to give up your citizenship from the US, you may be subject to exit taxes. Other jurisdictions as well. Look at what's happened in Germany, for example. Foreign asset reporting. So you no longer live, or you're traveling around, or you're investing, you're being an entrepreneur internationally. Well, you have to report all of your foreign investments more or less to the US. Not just the US anymore. For example, if you're in Portugal, if you're a Portugal tax resident, the equivalent of what we know as the FBARs or FinCEN 114, where you report your foreign bank accounts to the US, there's an equivalent for Portugal. You need to report your foreign accounts to the Portuguese tax office as well. So something to bear in mind, that asset reporting. And then in another video, I've spoken about the crypto regs, which of course this is not rocket science, everybody expected crypto regs. It was coming all the while, and of course it's been accelerated by certain very big news items. I'll leave it there. So the rules around crypto, around the automatic exchange of information between the exchanges and intermediaries when it comes to crypto and the relevant governments. It's automatic, not a request anymore. That's coming in Europe. That I'm talking about DAC 8. There's some anti-money laundering. So let's see, the European Council of the European Union proposed some enhanced AML or anti-money laundering rules earlier this month, I think it was. I think it's earlier this month or last month. Anyway, so it also spoke about limits on cash transactions, and it also strengthened the rules around declaring the UBOs, the ultimate beneficial owners of structures. So, that's this whole stuff against privacy. So it's a thing. So my point is, you're staying in Portugal long-term, all good. Bear in mind that the NHR is unlikely to be extended, and also bear in mind how strict the regulatory framework is around, just disclosures of what you're doing financially and in terms of business, as well as the strengthened rules around taxation, the fallback rules, the citizenship-based taxation trends, and so on. So, because we have a number of clients as well, part of their strategy in moving to Portugal is that they would want citizenship. They want European citizenship, and once they get it, they want to give up their US citizenship in the hope that, from a tax or from a privacy point of view, they will be better off. So I'm just giving you a heads up that may not necessarily be the case. Okay. Hope that helps. If it is that you want to talk about some of this further, just visit HTJ.tax and you can schedule an appointment. See you next time. Bye-bye.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.